morning, traders. Welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado, and it's a pleasure to start the week with some of our Elliott wave counts on live markets. Before we start, let me tell you about our website, elliottwavestreet.com. Under the membership tab, you are finding the membership plans. We have the Forex, the stocks, and the full access, where you can receive daily report with charts, with videos, and more. Also, we have the Telegram channel with trading ideas, and we have the Members Academy with education. So it's a fantastic membership. You can take your first month trial. Let's talk about the euro now. We have been working on the plan of buying the euro. So let me show you what we have been doing inside the membership. The first entry was here. So I went long at the close of this green candle. The protective stop loss was 35 points from the entry, and at the 1-to-1 risk-reward ratio, I booked partial profits. The price then makes a low here. It was a Friday, so it didn't trigger this one, but anyway, it was a good one as well. And last week, we went long on this candle at the close of this spinning top formation. Right there was the last entry. So we went long here at the close of that candle, leaving a protective stop loss around 35 points under the low. And at the 1-to-1 risk-reward ratio, I booked partial profits, the same as always. And the price went up to 109.20 area, and the trigger was at the 108.20 area. So we're talking about 100 points, 100 pips in distance in this setup. I was thinking that this was wave 1 and that the wave 2 was going to show up something like an ABC, and then I was planning to add to buy more to the position, to go long here and capture a big wave 3. That was expected. So it was a pretty good entry and a good trade. However, this leg down was completely unexpected. I wasn't expecting this one. This one was a surprise move. So let's review what the right shape of a wave 2 on the Elliott wave theory, because that's extremely important. When we are seeing a wave 1, 2, 3, 4, 5, and impulse, then we're waiting for an ABC for wave 2 that should be shallow, should be losing momentum, right? But if on the other hand we have the same leg down here, the retrace, and then we have a strong move down like this one, or from here the price starts moving down strongly like the euro did, something is not working as expected, right? When we start seeing those strong candles, it's not a wave 2 anymore, you know. When we see those candles adding momentum without the B and the C, clearly something is not right, and the price is likely to make a lower low as it did here. So now let's talk about the live market and what's going to be the entry. Oh, and of course, a huge advantage, a huge edge is to go long at the market extremes like we did here and here. Those are the best entries because you have an advantage in terms that if the price is not ready to start moving higher strongly, if the bear trend remains active, we'll still have the chance of making some money and not losing. That's important. So now let's go through this area and what's the plan for this week. So we have this strong move down, and the plan for the week is actually pretty simple. We are looking for this ABC to complete wave 4, and at the bounce of 4, here the lower low is going to be the entry right here. We're looking to go long once the price completes the leg down, to go long right here to start building the position again from this area. So clearly the institutions are shaking the market. What that means is that when you have a move up and you are looking for a corrective, like we are doing in this case, let's say that someone buys here. So the institutions, they try to shake the market to take them out as a bull trap, right? And they shake the market as much as they can because they don't want to share the profits with other participants. So even most of the times, even when traders are right in terms of direction, they want to shake out the market. They want to create a lot of noise, a lot of traps, in order to try to let the price run in one direction and make some good profits without sharing those profits with other participants. Right? Makes sense. That's the plan of the institutions. So creating all these shakeouts. But when you trade at the extreme, you have an advantage, because you can either book profits, or you can move a stop loss to break even, or take partial profits, or well, do the different things depending on your tactic on that trade, but not losing, right? Not losing anything. So that's important. Let's have a look at another one. Is the S&P. On the S&P, we could be at the bottom of the market. I was looking for a better entry, like some sort of double bottom. It still can happen. Let's say that the market makes something like this and give us an entry here to go long at the bottom of the market. That will be my ideal trade. That's the one that I'm looking for. If the price builds here the 1, 2, 3, 4, 5 sequence and then the ABC, then the strategy is going to be to go long here. But something that have in common these two setups is to go long, because on the higher time frame, on the daily chart, we are at that area where I'm looking for the bounce of the setup of the trade. I started to accumulate my S&P from here, and I want to add to the position here at this area, because we have a breakout of this resistance, and the price is now testing, but it's unable to cross. So today it was a scary candle, especially overnight, because the S&P was trying to move under this area strongly, but now it's rejecting, which is pretty good news. That rejection, even if the price makes a lower low, is starting to show liquidity at this area, is showing absorption from the big guys. And this is going to be pretty interesting, because I see the S&P coming up here once the cycle is done, and then coming up here. So then on the hourly chart, we just need to validate step by step, of course, that process. That's why it's so important that you sign up for the Elliott Wave Street membership, where we are going to define the right path for that validation this week. If you ask me, if the price comes up here, let's say in 2 months, and you ask me, what should we do here? What's the next step? I'm going to say here is pretty hard. We are already here because the entry was here and the entry was here. So we are at a very important level on the S&P, where if it validates, we can have a beautiful setup back to the previous high. So lower time frames are going to give us that validation, where to trigger, how to trigger, and then we just need to follow the price, and then we just need to follow the setup. Let's have a look at oil. Oil is going up, and let me show you first what we have been doing inside the membership. We went short here, first entry, second entry, then we were seeing this as another chance, right? And this one as another chance, but I was looking for a strong breakout of this low, so some sort of wave 3. Instead, the prices started to lose momentum, and we failed to break out. Of course, if we short here, we have some good profits. For example, look at this trend line, right? So when the market break out the trend line and it started to trend on the other direction, building an impulse up, I said, okay, this is not working in terms of the wave 3. However, it was a beautiful trade. Now we are going back to this previous high. So the next trade in short terms that I'm looking on oil is to have price coming back to the 118, rejecting those highs, and that's going to be my other entry to sell here. And this time the plan will be to have a nice breakout of the lows to capture these beautiful wave 3. All right, so you can see that during the road, we can make some adjustments, but if we trigger the trades on the market extremes, we have a significant advantage in front of others because we can trigger faster. So that's the beauty of trading like this, using the Elliott wave theory with price action. I think it's so fantastic. It's fascinating trading like that, using Elliott wave, adjusting the wave count during the road, but using that information to trigger based on price action. So it's something really good that we should always learn how to do it and apply into our trading. So if you want to learn more about this technique, you can learn by checking the live markets that we cover daily on ElliottWaveStreet.com/membership. You are going to find all the plans that we offer, the forex, the stocks, or the full access. And we're offering this month the trial, so you can sign up for just $19 and then $75 per month. All right, traders, that's the plan to start the week. Please have a great start of your week. I'll see you soon. Take care. Bye-bye.